Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Friday, April 22nd. It is 6:17 a.m. as I'm starting the video. And as always, please run your player at 1.5x. I think you'll like that speed. I've got a lot to go over today. Just briefly look at futures. Oil's down 2%. Bitcoin's down a little more than that, maybe 2.25%. Equities are down about 0.3%. Not going to really get into the macro today. There's not a lot going on today as far as that goes. You can go to the blog site webpage and look at the big earnings names for today. There's a few. I think I saw Schlumberger. A couple other ones of note, but I really want to recap yesterday, and I think yesterday is a day for you as a trader to do some deep introspection, especially if you are a person that is in front of the screen all day trading. There's a lot of days where not a lot happens, and there's not a lot to take away from any particular trading day. But yesterday really was a day where I think there's a lot to be learned, and only you know how you felt at the end of the day. Were you ecstatic because you made a lot of money? Were you totally depressed because you lost a lot of money or somehow fumbled the ball and weren't able to capitalize on the moves from yesterday? What I'm going to do this morning is kind of not only help with the technicals, but try to give you some ideas, some questions to ask, and potential answers where you can really move the ball based on what happened yesterday. And so let's get into it with the charts. I put a lot of faith in these oscillators. They are right in the middle of the range, even with yesterday's drop. Same thing. We got the New York here, right here at -16. I mean, that's nothing. It could go up or down from here, absolutely in the middle of the range. I think it's going to go down, but, these are only good at the extremes. And if you look at NAMO, the one for the NASDAQ, it's exactly the same. So oscillators really aren't going to help us here. VIX, we came down. We had the little rally up to 25, then we came back down, found support at 20, and then had a big up day yesterday. I think what you do on the VIX is you just keep it on your dashboard and you look for trends. You may want to put an alarm at 25. You'll see that on the screen. You'll feel it in your positions if if we take out 25 today or in the next couple days, you'll know that the selling's increasing, and you can watch that thing periodically throughout the day to just is the VIX building, climbing higher, or is it falling? And today is an important day for a number of reasons. Number one, it's a Friday. If you've been with me a while, that I feel the last 2 hours of a week are important in terms of risk appetite. And today may even be more important. Why? We had a lot of selling yesterday. So are people going to say, get me the F out before the weekend? And maybe just kind of stabilize here in the morning, but then in the afternoon, get out of more positions? or do they kind of hold it in this range here? Because what you'll see in the next couple slides is we're at support. So I think it's going to be really important how we head into the weekend. And then you've got that Wall Street axiom. If there is robust selling today, bad selling never ends on a Friday. Probably going to pick it up, where we left off on Monday as people continue to get out, and then possibly look for, turnaround Tuesday. All these little Wall Street axioms, have a kernel of truth in them, in the sense of, you get that turnaround Tuesday, because if you have bad selling on Friday and then you have follow-up selling on Monday, then on Tuesday there's a chance for a bounce. So let's get into the charts. Yesterday, yesterday on SPY, I made a distinct point of talking about 450 being really, really important. We reached up to that level for a touch, and then we reversed and just came all the way back down in the range. We talked yesterday about this moving average cluster should act as support. Well, it didn't. So when something happens that from a technical perspective should not happen, you need to take note of it. So when price goes up to a well-defined resistance level and then comes back down, that's all fine. But what wasn't fine is price slicing through the 50, the 20, and the 8 all in one fell swoop. That should have told you mentally there's a lot of selling pressure behind this move, because under normal circumstances you'd expect a hesitation at the 50 and you'd expect that thing to hold, but it didn't. And so we fell all the way back down to the bottom of the range, sitting on the 200-day. So that 200-day is going to be really, really important. So here it is on the 2-hour. Here is that well-defined range at 450. We talked about, resistance, support, 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 resistance, resistance. Well, that was resistance again. And then once that stalled and price reversed, what was your, well, let me see something here. I want to go to, here I have it. We'll just look at this page because I got the bearish technical events right here for you. And what this summarizes is, for you, a trader, the technical events, the triggers. So let's look at it. Number one, we had the gap up, and we talked about that leaving a gap behind below, right? Just like we always do. Price got to this well-defined level where it's gotten rejected and support before, and it stalled. That's your first signal, right? Be cautious. If you are long, be cautious. Then you got a price moved into the opening gap. That's your first entry, right? Price filled that gap, came all the way back down to where it closed on Wednesday, and then went green to red. So you filled the gap and you kept on going. You went from green to red. They faded at 100% and took it red. A green to red is bearish. After that, it lost its level at 444 and just right on down to prior support. So there were 4 significant things that happened on price on SPY. And as those things trigger, I mean, go back in your day. What were you thinking? This is all about the daily recap of what were you thinking at the time. And if these technical events did not register, write it down. Have this be a little playbook, because this playbook happens again and again and again. Let's move on to the cues. We said going into yesterday that it was in a much more bearish posture than the SPY. Why? It was already below all the moving averages, right? We got the full bear stack. Well, we got the initial move higher where it stalled, and then price went down and lost prior support. Whenever you lose support or make a new low, that's a bearish event. I think this shows a real nice clear picture of what we just showed on the SPY. Price gaps higher to a well-defined level where it has been rejected before. Reject, reject, reject. Yesterday, stall, reject. Price comes back down, enters the morning gap, just like on SPY. Moves down, fills the gap, goes from green to red, then it turned out even more bearish than SPY. Why? On the same relative level, SPY did not take out the low. Let's look at that. Right here. Prior lows held on SPY. QQQ, they did not. They made a new low. So they broke out of the consolidation box to the downside. So now, unless price can come back up and recapture 339, it's going to remain definitely on a sell signal. So today, you've got a clear pivot at 334. Yesterday's close. It either holds it or it doesn't. And if it breaks lower, I'd be looking for something around 328, right in that area. But actually at that point, probably much lower over time. Here we've got the same thing on a 30-minute chart. Not a lot to add here. Only to say that you can see the value area here going down to 334. We break down below that. We're moving into a void. And where price could move rather quickly. IWM never broke out of the trading range. We had a gap up, like on all the other ones. Then it reversed, lost the 50, moved into the gap, and then went from green to red and kept going. Here's the 2-hour chart. Remember yesterday we said use 203 as a pivot. That was right here. We said use the 50, which came in right at 203. We gapped higher. They started fading it. Price moved into the gap. Lost the 50. That was your signal to get short. And then down it went, like all the other ones. Here on the 30-minute chart, just showed you the different places where things happened. And remember what we said, re-entry into an old trading range, the target becomes the bottom of the box. So even if you missed the gap fill, even if you were preoccupied or somehow missed that, if you caught the fact that price moved back into this old trading range, and you remembered that the target's the bottom of the box, if you're re-entering the range, you got from 201.50 down to 197. I mean, that's a nice trade in itself. So now, going forward, 197 is your clear pivot. Just jumping back here, you lose 197, then you've got a ledge here at 195, and then below 195, then it falls away pretty quickly. Facebook, I mean, 2 days straight down, losing levels from above is always bearish. So, I mean, pick any point in time, whether it was, back here or here or here or into the gap, anywhere along the way, you would have been profitable on Facebook short. Where does it go from here? Well, notice on the daily chart, we're back at this prior low. If we move on to the weekly chart, we are right at a super high volume, overpriced weekly support bar right here, right now. You break this one, I mean, odds on favor, it's going to go down and test that COVID low area down at 150. And it wouldn't take much of an imagination for us to draw a leg down, little bear flag, B leg, and then a measured move down here towards the COVID low. Even, I can just tell on a measured move basis, might even be a little bit below that. But those are all approximate targets. You can't go, basing a trade on a specific, down to the number measured move target. But it does give you some perspective on where it might be going. And certainly near term, if you lose this low here, then it's going to bring in more sellers, right? Make a new low, more sellers come in. So Facebook is right on the edge. Apple, has been holding up really, really well. Just from an active trader perspective, look again how well the levels have worked. We gap higher, has a reach up candle to 71.50 right here, to the penny, rejects once it lost 170, and we were talking about this in the trading room yesterday, that there were several back touches of 170 that held, but then when it didn't, that was your short entry. So moved from 170 down to 168.50. If you missed all that, you still had an opportunity at 168.50. Once that broke, then down it went. So I think today you've got these little prior lows in here at 165.5. You take those out, then I think we're going to be coming down into this 163 area. Let's take a quick look at the daily chart. Notice that over the last couple of days, we've been right in this area with the 20, the 50, and the 8-day all clustered around. But now with that close yesterday, we are below the fast moving averages, below the 50 EMA. So now if we were to lose, see, we've got this big value area coming up right here at 166.50. You break below that, you're probably going to come down at least down to 161. And if all that's going on, there's got to be selling elsewhere, and I think it would come back down for another test of the 200. Tesla, really interesting yesterday. We had all this congestion in this trading box. Then it made a big gap higher, like 10, 11%, something like that. Look where it stopped, right on the gap fill. And then it reversed. And then you had that whole sequence again of stall at a well-defined level. Doesn't get any more well-defined than a gap and a gap fill. We had that all penciled in. Then you go enter the gap, and that's your short entry. And then down it went, broke this 10.50 line, came back down to the old box at 10.20, 10.25, broke that, came right down to the midpoint at 1,000. That should ring a bell. I have no doubt that before this little sequence is all said and done, that we're going to fill this technical target of not only the gap fill, but the re-entry into the old trading range down to 980. And then all those other comments that we had from before, you lose 980, then you're in this void with a lot of room to the downside. Let's look at Microsoft daily. It's a broken record. It really is. Reach up candle to a well-defined level, reached right up to this gap, got rejected. Price is below the 50, below the 200, got rejected and reversed, but held the prior low area. Let's look at the 60-minute chart real quick. Here's your gap up, your stall at a well-defined level. That actually coincided with the 38% fib. We talked about that with the alignment between the fibs and technical resistance. We had that on the chart. It reversed, then moved back into the gap, filled that gap, and then went red. So the most important area to watch for today is a move below this prior low into this $2 gap from 278 to 276, and then going back on the daily chart, these prior February lows at around 270, 250, let's call it, right in here. And then, of course, if we were to break the February lows, I haven't even looked at this weekly chart, but let's look. Yeah, I mean, we're right here at all this support. And what I've done here on the weekly chart is drop in the Fibonacci retracements from the COVID low to the high. And you can see that a 38% retracement would bring it back into 363 right here. Very nice alignment with this value area. And if we were to move below 260, then a zone between 230 and 240 would definitely be in the cards. And then, you know, if it goes lower after that, then we'll deal with that when it comes. But you can see here, you've definitely got a line coming right in here, and then you've got this little void in the charts that could bring this thing easily back to 260. 60-minute chart on Amazon, we had the A leg down. I drew this in this morning. Flag, break of the flag, coming down, measured move, has this coming down into the 28, 25 type area, but all the same comments applied, just like all the other ones, that once it went red, and definitely once you lost this prior low, then that brought in more sellers. Let's look at the daily chart real quick. I used a thick line here to show you the A, B, C type move that brings it down towards these prior lows that we saw in February and March. And you can see this is classic bear flag action. What do I mean by that? Once you get a down leg and you build this flag, oftentimes what you see on a breakdown, or if you're anticipating a bear flag, what you want to see is an impulsive move out of the flag. Not, oh my God, the flag broke. It's, $2, it's $2 lower than the flag. That's not really a bear flag breakdown. That's just random volatility. You'll see that and have it not play out. But when you see a decisive candle like that, that gives you an indication of, that bear flag breaking with authority and pointing lower. Now, we're back in this, well, we never left at this $600 wide trading range, but we're back at the bottom of the box here. So this 2950 becomes really, really important on the chart, because once you drop below 2950, really the next stop is the gap, and then to fill that gap, and then you're right back at the prior lows down in this area. And then if further damage is to be done, then we'll find those lower targets. You can see here on the fib retracements, we had come back to touch these 50% levels in February and March. So now if we break below and come back down again, if we were to break 2700, then that's going to bring in the 618 retracement and this little support zone, but that's all the way down at 2450. So that's obviously a long ways away from here, like $500. So we got to keep our eyes peeled on 2,900 on the Amazon weekly chart. Google, I mean, same thing. Gap higher, rejected, gap fill, green to red, broke the prior low. And actually, we talked about that yesterday from the standpoint, you don't want to break these prior lows. And that's exactly what happened right here. So you gotta say, going lower, as long as price stays below 25.25, bulls got to see that get recovered before they can breathe any sigh of relief. But it looks pretty ominous at this point. And this looks ominous too. Here's our fibs off of the COVID low. Spent a lot of time here at the top. You can see here we've broken below that 40-week moving average, and we're inching below these prior lows on the weekly, and we haven't even tested the 38% pullback, and you can see that's at 22.55. A 50% pullback brings you all the way back to 20.27, and that's $300 from here. So Google's right on the edge, and really at a critical juncture. I'm going to skip over Netflix. I don't want to spend any time on that. It's still in its bracket, and if you're interested in trading that, you should have your bracket set. Just did some oscillating yesterday, not much of anything. I have not moved these pivots from where they were yesterday, but remember the discussion. Simple as pie. On the prior day, Wednesday, we had a gap up and then a gap fill. Remember, with price sitting on the top of the prior trading range at 247.50, we said that's your pivot. Really, the exact same replay happened here. What did it do? It gapped higher, had a touch up here where it rejected the day before, rejected again, filled the gap again, except this time we entered the prior trading range from above 247.50, which even if you missed all of this, that was another sell signal, and really probably the most important one. Why? Because it was more to be gained. So if you got short at 247.50 with the target at the bottom of the box, you got that exact move for $7.50. So today you just got to have this prior low right here in the crosshairs at 238. You break that, and jumping over to the daily chart, we do have a line that comes in. I misspoke. I mean, we do have prior lows at 238, but we also have a large volume over price bar here at 235. What I would do is not get too excited if we just kind of inch down here to that 238 level. I think your bigger opportunity, your higher risk reward, is going to be on a break of 235. That you can see below this ledge is pretty good sized void in the chart. I think you could have a run down to 223 pretty fast if some selling develops, and you can actually see this you got the bear flag this A and B leg put together, and then you get an impulsive breakdown out of this flag, you can see that this is going to point to even much lower than 223. So why don't we use 235 as our pivot today on SMH, and if you want to carry something into next week. Now, coming down the home stretch, let's look at ARC. Having these shorts on yesterday really, really helped, and we've been talking about it the whole way. Market had a crap day yesterday, but whenever the market has a bad day, ARC has a worse day. Why? Bubble, Ponzi, unprofitable. These things are heading lower. If Apple's heading lower, this is heading a lot lower. I mean, just do the math. And although they're down a lot, I still think they go lower. So right here, we're at the, this is the FinTech one. We are right here at the March lows. Let's look at the weekly. Right here, you break below these March lows, I think you're coming back to the COVID lows down around 1750, something like that. I wouldn't do anything, if you're not in it right here, right now. I wouldn't, probably step in unless you get some kind of a big break today. This is where it's supposed to hold. And if it doesn't, I mean, that's a clear sign to you that it's going lower. If we make a new low here, I think the door opens to everybody getting out, like down here into the 17s. I still have my position, so I'm just sitting tight. All these charts kind of look the same. ARC Genomics, I wasn't in this, but I got in it yesterday. Not anything big, but we're right back down to the prior lows. Let's look on the weekly. Right here, breaking this 40 level. We've got some prior trading back here at 35, and then we've got the COVID lows, and then we got a support level down around 2750. So I think this heads lower. Flagship fund looks exactly the same. Kickback rally, faded it right back here to the lows. Let's look on the weekly to get a better time frame. You can see we are at the bottom of this value range, much below here. Big void in the chart, and so that would really open up these COVID lows down here towards 40. And if Tesla proceeds down, that's just going to be an accelerant. I mean, that's probably, from a valuation and all that stuff, probably one of the higher quality names in this one. So if it heads down, just by definition, it's the largest weighting in this index. So it's gonna push to the downside. ARCW daily chart came down, filled this prior gap, a little off the March lows, down here at 6750. But I have no doubt that it's going to get there. And then you see the same structure in all of these charts. There was a trading high in the February before COVID, and that comes in right here at 70. You break 70, and then that brings in all these COVID low levels down towards 55 and 45. So I think those are or have been good ballast for the longs. Now I wanted to share to you, I know we're running long on time, but I wanted to share with you some of my mistakes over the last however many days. Number one, I had too many positions. I like to have relatively small positions so that any one name, can't hit me too hard. Let's just take, uranium, for example. I had Cameco, I had the URA uranium ETF, and I had a couple of individual names. Well, if you got 4 or 5 names that are all small, but they're all in uranium, you basically have one big uranium position, and when they go after it, like they did yesterday, then you get hurt. So that wasn't really too hot on my part. So that was a learning lesson. Also, when people sell, they sell the things that are the most liquid, especially institutions. And if you remember back to COVID, they sold everything. It didn't matter. And that's what happened yesterday. Gold was green yesterday, and the miners got destroyed. All the things that have been doing really, really well got destroyed. Fertilizer, copper, all the different commodities got hit, along with everything else. So when they go to sell, nothing is sacred. Defensives, they went after those too. So, those correlations go to one, and that was a stark reminder for me yesterday. And also, I need to be more cognizant of my, mental bandwidth, because you get a lot of positions on, and when it starts hitting the fan, it comes really, really fast. And I'm not going to say I lost composure, because I didn't, but you can only process so much. And once you reach that bandwidth limit, then it's hard to exceed. It's just like a throttle on your internet. You just can't, once you max it out, you can't push more information through. So when my bandwidth was maxed out, then it kind of prevented me from taking some of the opportunities that we spoke of on the charts that we went through. But for you, I highly encourage you to do a thorough recap from yesterday. You should have made a lot of money, but if you didn't, did you tread water? Was it an execution thing? Was it a I didn't know what to do thing? Or I lost my composure thing? Like, all of a sudden, I didn't, I know on paper what I'm supposed to do, or the technical triggers, but when it all started happening, I lost composure and I wasn't able to execute. Those are going to be some important takeaways from yesterday. And if you get that right and put that corrective action in place, it's going to serve you really, really well into your future, like maybe today or next week. A lot going on, and it's going to get busier in the future, I have a feeling. So let's wrap it up there. Hope you enjoyed the tape. I hope you got something out of it. If you're new to the channel, hit the subscribe button and jump over in the show notes. There's a place, a blog link, to drop in your email, get all my content morning, noon, or night. So let's wrap it up. Have a good day. Stay calm. Stick to your discipline. Honor your stops. You won't get hurt. This has been Chris Buss with Traders Profit Compass. Talk to you next time.